Let's talk about this call of the day, though. It's Atlantic Equities initiating cybersecurity. Fortinet, overweight, Palo Alto, and CrowdStrike both initiated neutral. I said it's our call of the day. So, Rob Sechan, so Fortinet gets overweight. The target there is 76. You own that, yeah?
We do. We do. I mean, they reaffirmed their guidance. They're a 20% grower over the next 5 years. They have a huge free cash flow. Margins 36%. I'm going to tell you, this is a relative value play. I love my friend George at CrowdStrike. He is a friend of mine, but that stock's just not cheap enough for the type of position that we own. So Fortinet is what we decided to, how we decided to play this. We think it's obviously a really important space, and I think that, you know, relatively cheap is what I would say, because none of these stocks are inexpensive, as you know.
Okay. You're no longer invited to George's Labor Day barbecue. Sorry. After you said that, your buddy, the CEO. CrowdStrike, though, Josh, which Rob Sechan says is too expensive for him, that's yours.
Well, it's not a cheap stock, and I do think that's actually why the stock hasn't performed after reporting essentially a flawless quarter. Even the analysts that have it at a neutral, I think one of them said something like, there's really nothing to critique here. Right now, expensive stocks relative to cheap stocks is not the place to be. Rob is right. However, over the intermediate to long term, that's not what actually wins out. And the best evidence of that, let me show you a cheap security stock, Checkpoint, CHKP. The stock has been cheap for 10 years and has also underperformed pretty much everything in the space. So there's got to be a secondary determinant other than just the multiple. And I do think that CrowdStrike's business model and growing dominance over the entirety of the Fortune 500, et cetera, large governments, police forces, security agencies, like that's going to be more meaningful, I think, than a discounted PE. So I'm going to stay with CrowdStrike. And George now will like me better than Rob, which I think is important as well.
That's true. You're going to the barbecue. Seats, you're out. Palo Alto is Jenny's pick, and why do you like that one the best of this space?
So Josh is exactly right. It's not just about the multiple. You need the story to work in concert with the multiple and with the valuation. And I shouldn't even say multiple, because in this case, you're not looking at the multiple. You're looking at free cash flow yield, revenue growth, billings, all of that. So you have three companies, really great companies, right? Super essential. We all know that tons of spending in cybersecurity is still going on. But you've got Palo Alto that's down 2% on the year, basically flat. CrowdStrike down 15% on the year, and Fortinet down 30%. Why? Because they went in with the same great story, but they had very different revenue growth and valuations. In this case, we look at it and we say, okay, we like Palo Alto best because they're pumping out $2 billion of free cash flow. They've got a 4.5% free cash flow yield. That plus the story gives us the most security and comfort in owning this company.
All right.